So we're gonna go ahead and do the daily bias or the daily narratives for uh, the third. Right now it's the second, but I like to wait for Asia to play out because I'm a very, very big fan of Asia setting up the play for London and New York. So I love waiting for Asia to play out at least halfway through the range, halfway through the day, because it'll create its range normally halfway through. Like if we look here, halfway through Asia, all right, we're gonna say this is the halfway point. We created a very important low here for Asia, and once we started trading underneath it, right, we failed to close above the 50% of Asia, and it dropped. And if we look here, right, for 2 days ago, if we look at the midpoint of Asia, we created a high and a low, right? We created the range. That's really good. We want a big range, tight range, big range, little range. It doesn't matter. We just want a range created for Asia because then we can follow what we know and what we learned, which is, when we turtle soup something, right? We always trade above a key level, right? This is the low here. When we turtle soup the low of Asia or the high of Asia, we can anticipate the false breakout, right, to go the opposite way. So seeing Asia play out at least halfway through lets us know that there has been a high and low created, an important high and low, and that becomes our external range that we look for to take our play in. So this is our external, right? This is our internal. We want Asia to play out a little bit so that we have something to take out. If I try to do my daily bias before Asia even starts, like right here, I still have a range to play off of, right? But the range that I have is so wide. The range that I have is the previous day. That's a big range to wait for a trade to pop up, right? That's a big range to wait and anticipate a trade. So, like I said, I like waiting for Asia to play halfway through because we have the range. What what's up, fool? Oh, you good. So I like having Asia play out halfway so that way we have external liquidity. We have liquidity built up to take out, right? I'm real big, you guys all know this. I'm real big on tapping into external going the opposite way because that's your turtle soup trade. So if we look at what we got going on right now, we have Asia, and if we look at halfway through Asia's range, we've created a pretty decent low and a pretty decent high, right? Right now our high is up here, but this is the high and low that we've created. And right now what we're doing is we're trading right above or attempting to tap into that external range of the high. So we already have an anticipation of what's going to happen just based off of turtle soup, which is the high is created, right? And then we attempt to displace above the high. If we fail to displace and trade back in the range, it's a good sign of a market structure shift, right? That's why I was showing you guys if we break this low, right, we'll create a break of structure. And what happens, oops, what happens at a break of structure, right? We pull back. We pull back so that we can actually create that break of structure. If we have one of these, like a wick, fall through here and then we trade higher, it's just an uptrend. What we want is we want that external range to be taken out, right? This is your external. We want it to be taken out or tapped into, trade back into the range of Asia, and then come back up and fail to take the high. That's gonna start the market structure shift, right? You got your high, your low, your highest high, your low, and then creating the next high that fails to take the new Asia high. That's our breaker block or our order block, right? That's our fair value gap entry, or that's our inverse fair value gap from here, right? To get in, we want the failure of the taking out the swing high that's created once once Asia high has been tapped into, right? This is, remember, this is our Asia high. We broke it here by 1 tick, but here we attempted to displace, right? Failed. We failed to displace. But what we did do was create a BOS, right? We traded above it. So what happens on the BOS? We trade down. If we fail to take this low, what does that create, right? Then we attack the high and we go higher. So when we create a new swing, it's very important that we take out the previous and fail here, and that lets us go lower. If we want to go higher, we fail to take out the low that's created, right? Here's the low, and then we take the high out and we start all over again. We fail to take this low out, right? We create that break of structure. If we fail, we go higher and we take out this high. Then guess where we're going next? Back down. If we fail, we go up to here, right? If we go back in time and we go to right here, if we take this out and go higher and fail to take this out, we create that shift in structure. So it's very important that, like I said, Asia creates the low and the high of the Asia range, so you can anticipate where we're going to break structure. Are we going to take the high out, take out the high Asia, break structure, and fail to take out the low and attack the high and do the same thing? Or are we going to trade back into the range, take out the low, right, and then go to the high, fail, and then start to shift the structure? So that's where the beginning of the anticipation of the market begins. The beginning of where you think your draw on liquidity is going to be for the night. It starts with the beginning of Asia. That's why, or the first half of Asia. That's why I created the frameworks, right? The different frameworks that let you identify. It lets you identify what? It lets you identify exactly what I just showed you. It lets you identify that, are we going to take out which high, which important high or low, right? There is one factor, which is equilibrium. Equilibrium is also treated as a high or a low, right? This is your EQ, high and low. This is your high of previous day and your low of previous day. When the market opens up, what is your draw on liquidity as soon as the market opens? It's always, depending on where we open, it's always going to be EQ plus high a day, or it's going to be EQ plus low a day. That's always going to be your draw on liquidity as soon as the market opens. If we look at here, right, yesterday, we have our high, our low, and our equilibrium, right? When we opened, what did we attack? We attacked the low. So our draw on liquidity was attacked as soon as the market opened. Our previous day low got taken out. What do we like to do? We like to wait for us to trade back in the range to do what? To attack our next goal, which is equilibrium, because we traded back in the range. If we would have traded out of the range, we would have done what? We would have failed to take out the high or our EQ, and market structure would have continued its what? Its downtrend. When it would have attacked where? We would have attacked this low here, right? And then we would have created what? That break of structure. If we fail to break structure upwards, what do? We go lower. So looking back at yesterday, right? Took the low, that's your goal. EQ becomes your next goal. If we fail to take the high of day, what becomes our goal? Your low of day or your current low of session, right? Our session lows and our session highs are always our take profits. For me, it's always my take profit. It's the equilibrium is 1 TP and the high of day or low of previous day, or current session high, current session low, right? So when we were talking yesterday in the chat, what did I say I wanted to happen? I wanted us to hit current Asia low. Why did I want us to hit that once we started dipping down? because, well, now you guys see it, because we failed to take previous day high, right? We failed to take New York. So what does that say for market structure? We created the low, break of structure. Here's your break of structure. We created the low. We came back up. We did not take out this and create a BOS. So we ended up going down. What do we do here? We created a new BOS and the cycle starts again. As we come up in Asia, this is how I knew when Asia opened, excuse me. This is how I knew when Asia opened, we were going to be bullish. Not because of this inverse fair value gap being created, not because of this breaker here, not because once we break above a session and we trade back into the range, that session becomes used as support. The resistance becomes support, right? Resistance, support. Because of market structure. Break a structure, fail to take out the high, break a structure, right? This is the same shit here. And as we come up, we have two opportunities to continue the downtrend and one opportunity to change the structure and go to a higher time frame order flow change into bullish from bearish, which is what we keep going past where? Past EQ. We keep going and we create the new BOS, which is high day, where we shift structure from a bullish, a bearish, sorry, to a bullish. And when we come back down, we do what? We fail to trade back in the range and go higher. So looking at today, where would my flip, where would my change of bias be for tomorrow based off of what I just explained? My change of bias for tomorrow is going to be when we take out the high of previous day. If we take out the high of previous day tomorrow, then I'm going to start looking for bullish setups. I'm going to start looking for retracements into higher time frame PD arrays that will support price going up. But as of now, my eyes are drawn to what? To the downtrend because we've broke structure. We've broke structure here. We've broke structure here. We're attempting to break structure again here. And where we're trading at right now is equilibrium. Let me erase this real quick. What we're trading at right now is equilibrium of the previous day's range, right? So this is a perfect opportunity to do what? To go short, to create a break of structure because we failed to take the high, back up, fail to take Asia high, back down, break of structure, up, fail, break of structure, and then we continue the bearish order flow. Again, where would I be bullish, right? I would be bullish above previous day high because it confirms the change in order flow if we look at it from a structure point, which is lower low, lower low, lower low, lower low. What happens up here? Higher low, right? Higher low, higher low. That's our shift in the structure. That's how you identify your shift of structure on the higher time frame by using the sessions when you're only looking at the lower time frame. That way I don't have to sit here and go to the 1 hour, go to the 4 hour, map out where my break of structures are going to be, go to the 1 day so that I can see where the high of previous sessions are. I don't need to do any of that. All I need to do is identify the pivot points in the market, which are what? Session low or session high. So going into tomorrow, we're going to erase this. We're going to start our daily bias now that you guys have a better idea of why I always pick one narrative to go against my two or one narrative to go against my other narrative depending on if I'm bullish or bearish, right? So going off of what I just said, obviously I'm still bearish. I still believe that price is going to be supported by what? By higher time frame PD arrays at key levels, which is equilibrium, or previous day high, I want to see our higher time frame PD arrays attack these levels and fail. So I'm looking for more bearish price going into tomorrow. Where is my shift in structure? Previous high a day. We have traded for a long time now, and if you go back to your journaling, to your trading, if you look at it this way now, you'll see that we always, except for days when we range, right? But we always attack previous day high, take it and go higher, or we attack previous day high, fail to take it and go lower, and vice versa. We attack previous day low, we take previous day low and go lower, or we attack previous day low and we break it, but then we go higher. And that's the ICT anticipation of buying underneath old lows and selling above old highs, because the break of structure is always at the high or low. And if we buy the false breakout, we're anticipating what? The reversal of order flow. You can still catch the reversal or the retracement. In this case, these are all retracements back up, right? These are all areas to enter short, to do what? To get in at a premium price of short on the way down. The same thing goes for when you're going up. When we're going in an uptrend, all the lows that are created are what? Are a point in time to get into a discounted rate or the lowest rate of the day to go higher. Every break of structure offers a pullback, and when we break and come down and fail to take out the last high or low created, that offers what? A purchase at a discount, in this case because we're going up, the purchase at a discount, or the failure to take out the swing low and trade higher. I know I talked a lot about how break of structure works. It's very important that you just try to anticipate the break of structure as a retracement, or as the ability to identify that we are going to come back down and offer another premium, or go back up on a downtrend, go back up and offer a premium entry, or the lowest risk and the best place to buy and sell, right? The best place to sell in this case would be where? At the session highs or the failure to take session high, because that is where price reaches its peak, and then we continue the sell off. Yes, we trend this way and we go back up and we go back down and we do whatever we do all day, right? But we never come back to that very important high. We keep trading away from it till we finally displace far enough that trading back to it becomes a thing of the past, or it becomes something that you don't really look into because we've traded so far away from the daily high. Now we're looking to anticipate a reversal at the daily lows or at the session lows, right? Which is what? Break a structure. Break a structure, right? Now that we've continued, if we fail to take these highs and go lower, I'm going to attack previous day low. Do you guys have any questions so far? Make sense a little bit? That break of structure is so important to matching with your narrative and identifying that, holy shit, we just broke structure to the downside, we're gonna go up. If we break structure to the upside, we're gonna go down. Yes, we do have these crazy when we break structure, yes, we do have these crazy pullbacks, right? It's our job to anticipate where on the lower time frame to get into the higher time frame pullback, because trading through this chop is fucking scary. It's nuts, bro. You go, positive 1,000 to negative 100 in a second. But if you identify market structure and you identify that this is your pivotal high or this is your pivotal low, you can weather all of this chop. You also have to have the drawdown for it, right? But you can weather all of this chop because you have anticipated that price is what? Going to break structure and it's going to retrace. So when we break structure, that's where we buy the lows, or what everybody knows as turtle soup, right? Where we take out a key level, false breakout, or the manipulation from the accumulation and then the distribution. Looks like a peepee. So now we'll go into the daily bias of tomorrow. Obviously, I want to see price get supported for lower. I want to see NQ price lower, right? Here we have our external high, external low, equilibrium. What do I want to see price do? I want to see price drop and continue lower. Break a structure to the upside. If we break above this, right, I'll look for more bullish price. So let's go to the 1 day and we'll start from the beginning. We already know what we want. We want to see lower prices, right? Yesterday we wanted to see higher prices because of that change in the order flow that we believe to be happening overnight. And we did attempt to change the order flow, but now we know why we didn't, because we couldn't take out the high. We failed and dropped lower, creating a new break of structure to the downside. So we'll go to the 1 day. We'll map out our PD array, right? Our previous day's array. Nice big old doji candle. We'll go to the 4 hour. What is going to support price staying in a discount or continuing lower, right? What do we have here that's going to help us? We have a couple things. We still have this fair value gap up here. Too high, way too high, right? What else do we have? We have an orb right here that can still support price dropping, right? It's a good spot for price to do what? For price to reject and continue lower. Why would we reject here? Because we broke structure to the downside. Now we need to come back up and offer what? Another chance for a low risk sell. So we'll get rid of this 4 hour fair value gap and we'll use this here. This is going to be our 4 hour order block. We're going to use our 4 hour orb as what? As a PD array for going into tomorrow's price. Trading above 464 is my bullish shift to go long. When I say this is our shift to go long, it doesn't mean go long as soon as we hit 464. It means now we can anticipate what I just explained, which is the break of structure to the upside, come back down and tap into that PD array that we broke and go long. So now we're anticipating price action for not tomorrow, but for 2 days out. We're anticipating that if we break this high, what are we going to look for tomorrow? Tomorrow, we're going to look for where we are in time on these 2 points. Have we created our higher time frame high? Have we created our higher time frame low when we broke structure and changed the order flow, right? So now we can see where price wants to go 2 days out from now. What's today? Wednesday? Today's Thursday. So we can see what price is going to do on Monday. We can anticipate price going higher on Monday because what? We've triggered our bullish change in order flow. So this is where I'm going to look for longs. I want longs where? Above previous high a day. Where do I want shorts? I want to continue shorts here. This is my last line of defense for shorts, is this orb. And 464, 465, whatever that was, 464 is going to be my, hey, you should probably looking for bullish price action plays because we have changed the order flow from a bearish sentiment to a bullish. Now we're going to drop to the 1 hour and look for another reason to, more of a reason to stay short. One of the good reasons to always stay short is what? Trading above equilibrium. Because what do we do when we trade above equilibrium? We accumulate buy stops and sell stops from people who think we're going to break out and from people who think we are going to fall short. So we're accumulating, we're making everybody think that we're going to go high by spiking up, and then we're making everybody think we're going to go low by dropping. Spike, drop, spike, drop. And what are we doing? We're accumulating the orders, right? We're spiking up. Oh, everybody thinks we're long because we broke this accumulation. Oh, guess what? Psych, we break the low. Why? Because we break all these orders. And then we break the high, we break the low, high, low, accumulate, right? Until finally we do what? If we're accumulating above EQ in a premium, what does that offer you now? That offers you your low risk buy to do what? Oh, sorry, your low risk sell to do what? To get in at the market's high point or the pivot point to go lower. So when we're accumulating above and we have one crazy spike above, we'll hit a higher time frame PD array and we'll drop lower. So going into tonight, we already did the 4 hour where we think price can retrace, or we think price can retrace back to offer an entry here. But now we have the 1 hour, and what do we see on the 1 hour that can support price dropping? There's one thing here, and it's a very straight in the face up close candle on a downtrend, right? You have a little orb right here, a little order block. Yes, you have a breaker block in this area. Yes, you have equilibrium at the breaker, which is pretty significant for a unicorn, right? But we would have to drop to the lower time frame to find our unicorn entry. This is not a unicorn entry for the 1 hour that we're looking at, right? That would make it a strong unicorn. This is just a 1 hour order block, and price, we're watching price trade away from it. We don't want price to break above this orb. We want price to stay below this. Price breaks above this, it's going to be a, oh, hey, we might change structure. We can still take out our orb, right, and drop lower. We can fail to take our orb out and drop lower. We can straight drop down. What are we anticipating? What I'm anticipating is we trade during London up into the high of the order block, and we fail to take these highs out right here. These two wicks right here, these relative equal highs on the lower time frame, this is the relative equal high. On the lower time frame, I want to see us trade up into this and fail to take it out. I don't want to see us take out that relative equal highs. I want to see us fail to take it out and drop. So I'm okay with us breaking past the orb and dropping, right? Because it's a false breakout that we're looking at here. And we're looking at a false breakout where? Above equilibrium. So now we have our one narrative, our one trade we want to see. When London opens, or New York, NYO is about to print right now, True Day Open. When True Day Open comes, that's an opportunity for an injection of liquidity where we can possibly see that play out as soon as New York Open happens. If we continue to accumulate, right, inside of this Asia range, then during London, I want to see price attempt to drive and rally and then drop lower. So that's our A plus setup going into London. Our B plus setup is what? Here's our A plus. Our B plus is we come back up and we attack the higher time frame PD array, the 4 hour, and we drop lower. What's my C, right? My A, B, and C. My two A plus setups, my A plus and my B, are shorts at these two key levels. My C is my change in bias, where we take this out and we go higher. So I have 1, 2, 3 different trade ideas going into tomorrow. If I go to bed and I wake up and price is underneath Asia low, what narrative am I looking at? I'm not looking to trade number 3. I'm looking to trade number 1 or number 2, which supports the same directional bias, which is down to low a day. So if I go to bed right now and I wake up and we're trading up here, what scenario am I looking for? I'm looking for 3. I'm looking for 2. We've broke 1. Now I have 2 and 3 to go for. If I wake up and we're trading up here, what scenario am I looking for? These are obsolete now. I'm looking for a retracement back down into a PD array or our PD array that we created, which is the 4-hour, right? Turns this one into a breaker block. I'm looking for an entry on this breaker block to go higher. So regardless of where I wake up tonight, tomorrow, I have 3 different ideas of where price wants to go. 2 of them are supporting lower price. 1 of them is supporting higher price. Depending on where time is when I wake up is going to solidify which route I'm going to take. Am I going to take the first route, the second route, or the third route? Now, if we wake up and price has, oops, if we wake up and price has created crazy ranging day, well, I'm not going to trade any of them. I'm just going to look for scalps. I'm going to look for a different trade model, right? And my bias is completely out the window because we just ranged all day. But what's most likely going to happen is we will hit one of these 3 setups. We want, or I want, number 1 to play out. I want 1 to play out. If 1 doesn't play out, then I can go to 2, then I can go to 3. But we have to wait and see where we are during price when we wake up, when our time window is. Do you guys have any questions? So this is 1, this is 2, this is 3. No questions? I can go back to sleep? Guys are masters of the universe or what? All right, no questions? No questions. I'm going.